Hey guys, welcome to Our Financial Future. This is a channel designed to build a community of investors so we can all reach our financial freedom. In this video, we're going to go over the income statement. We're going to go over what each line represents, the things you need to know, and stick around till the end because there's going to be an important calculation that is really going to help you. So let's get into this. An income statement is also referred to as the profit and loss statement. You also might hear this be called the P&L. This shows the profitability of a company during a specific time frame. It shows the revenue it is making and expenses it is incurring during operations. So let's head over to my computer and see what it's all about.
Hey guys, so I like to use Morningstar as a place to get my financial data. We're going to be going over a company called Enphase Energy. So you can see on this page that we have 10 years of income statement data, which compared to Yahoo, you only get 4. So you can see how big of an advantage this is. And up here in the left-hand corner, you can see it says millions. These numbers actually represent millions. So this first number here in 2019 in revenue is 624 million. So we'll jump right into this. I'm going to be using a couple different income statements just to kind of compare. So this next one is the same website, except for there's going to be more lines to report and less numbers. And then you can see here on Yahoo the difference in the amount of financial data that they're giving you. So we'll start with this first income statement here. The first line is going to be total revenue, and this is how much money they made before any expenses, or if you can look at it, the total amount of sales. We want to compare how they are doing from year to year. And is this number growing or shrinking, or does it kind of just jump around? So we're going to look here at 2016 where it says 323 million. And then we're going to move over to 2017 where it says 286 million. And then we're going to go to 2019 where it says 624 million. And that's quite the jump, and that's a lot of revenue growth to be able to almost double your revenue in 4 years. So we're going to compare that to Apple. So we're going to go over to Apple here, and we can see in 2016 they made 215 billion. And then if we scroll over to 2019, you can tell that they made 260 million. So you can see that their revenue doesn't really jump super high. So they're not growing as much as Enphase. So we're going to look at the cost of revenue. This is essentially what it costs them to make their money. Could be cost of labor, materials, or even if they have to put items on discount. So the next line down is total gross profit, and this is the difference between how much it costs them to make that revenue and the total revenue. So when it cost them for labor and materials, this is the number they ended up after making all that revenue. Moving down, we have operating expenses, and there's going to be subcategories of this, but this is essentially how much money they spend to operate. The first line we have is selling, general, and administration expenses, also known as SG&A. The administration part are things that aren't directly related to sales. Back-end work like paying accounting staff, rent, office supplies, utilities, legal stuff like that is what administration costs are. The selling or sales part of SG&A would be things like sales commission, advertising, rent for sales offices, things that are directly tied to sales. Moving down to cost of research and development, these things are tied to innovation, introduction, or improvement of products and the process to make these products. Total operating income or expenses is SG&A and research and development added together to give you the sum. Total operating profit or loss is essentially the difference between total operating income and gross profit. So you can see that negative 127 and 108, the difference is negative 19 million. And this is essentially telling us that it costs them more to operate than the money they made off the goods sold after they subtracted how much it cost to make those goods. Moving on to the next line, this is non-operating income or expenses. And this total refers to gains or losses from things like investments, property, or currency exchange. Like if they made a sale in another country with a different currency, then they would have to exchange that currency, and maybe that currency is worth less or more. This next line down is net interest income or expenses, and you can see that they had a $500,000 loss. And what this line is it represents the interest they owe on bonds, loans, and lines of credit. This is an important number because when a company takes on a lot of debt, you want to know how much it is going to cost them in interest. So you can see this line where it says irregular income. And this is something that generally doesn't get reported on either gross profit or operating income. And this is kind of a special item in that you would get an example like if they discontinued operations, something like that. And where you're gonna find the details of this is I'll show you over in the 10K. And if you use Google Chrome, and I believe other browsers have this as well, the three dots up in the right hand corner, you're gonna click on that. And then we're gonna go down and click on find, and a search browser is gonna come up, and I want you to type in other income. And it'll give you, for Enphase's 10K, it gave me 6 matches, and then I'm gonna go down and read where it's highlighted, and it will describe what the other income is. And you can see that some of it falls under currency exchange risk. And total non-operating income expenses is just net interest income and other income expenses added together to get that number. So moving down to pre-tax income, and this is essentially taking the negative 19 number from total operating profit or loss and non-operating income, and this is essentially the number they have before they got taxed. You can see here that there's multiple lines of net income, and essentially what net income is after operational costs and the non-operating cost, and then after taxes, this is what they were left over with once all those calculations were made, and that gives us our net income of negative 22 million. So this means that they weren't profitable in this year. So they weren't profitable in 2015, and they got worse in 2016, made it better in 2017, even better in 2018, and then they had exponential growth of 161 million in net income, which is a huge turnaround for the company. Now we're going to look at the valuation of the company and how well we can measure the performance with a calculation. we want to look at how good they are at lowering the cost it is to make these products compared to the revenue. And when we look at this over time, this is how they will become more profitable. This calculation is taking the gross profit here in 2015, which is 108, and dividing it by 357. And so if we take a calculator out here, we'll punch that in and we'll see that it gave us a total of 30%. And now we can do 2016. So now we have 58 divided by 322, which is only 18%. So it got worse. So now let's go over to 2019, which is 221 divided by 624, which gives us a number of 35%. So we can see that they were able to increase that number. We want to look for a company that can increase their gross margin. And when we figure out this calculation for the company we're looking at, we want to go to our competitors as well and see how fast they can grow their gross margin, because a company that can grow their gross margin faster than the competitors has a competitive advantage over them. And to explain this a little better, it's essentially if the company can be more efficient at making their product at a lower cost, then their gross margin is going to go higher. So it means that they're outperforming their competitor when it comes to how much they spend to create their product.
Guys, thank you so much for watching my videos. If you like this video, hit the like button. If you want to see more content like this, just hit the subscribe button, and I'll see you in the next one.